Hello traders and welcome to this module. So gradually we are getting closer to where we will actually trade live, where we will use all the information we've learned right from the first module up to now to actually analyze the market and trade properly like professionals. So this module is on strategy and strategy automation, and for us to learn how to trade properly and how to consistently make profit. And after this, we'll have one more module on trading psychology, which is one of the most important aspects of trading also. And after that, then we'll trade live. In this video, we are going to learn about strategy and strategy automation. Okay, so what's a strategy? A strategy is basically a systematic way of doing things in order to achieve a specific results, right? So in Forex, it's also similar. Okay, so a Forex trading strategy is a set of rules which guide the trader on the best way to analyze the market, enter and exit trades in an effort to make the most profit while minimizing risk and preserving capital. The goal of your strategy should be to help you analyze the market and enter in the best possible way, okay, in order to minimize risk and also maximize your profits while preserving your capital. So your strategy has to help you preserve your capital. It means your strategy has to inculcate risk management, has to inculcate money management, right? Because we just learned about risk management in the last module, and we learned that it's the way we can preserve our capital, right? So your strategy has to have that in mind. Now, the goal of your strategy is to give you an edge in the market in the long run. So that is the goal of your strategy. Your strategy must be such that if followed correctly over a good sample of trades, you are sure to be profitable. That means your strategy gives you an edge in the market. So trading is a game of probability, and your strategy helps you put the probability in your favor if followed correctly. That's just it. Your strategy is supposed to help put the market in your favor. Okay? By saying that, I don't mean that every trade you take will be a winning trade. Okay? Every trade you trade cannot be a winning trade, even if you have the best strategy. But your strategy makes it possible such that as far as you maintain that strategy for an extended period of time over a good sample of trades, you are sure to always be profitable. Okay, so it means your strategy has to have a positive expectancy. Okay, so there is actually a way to measure the probability of your strategy. There's a way to measure how efficient, how profitable over time your strategy is. And we're also going to look at these methods later in the video. So your strategy as a trader should depend on the type of trader you are, and should best suit your personality and trading style. Okay, so it means if you are a swing trader, your strategy should flow with the type of trading you are doing, which is swing trading. If you're a scalper, your strategy should be a scalping strategy. If you are a position trader, your strategy should be a position strategy. Okay, and then it should best suit your personality. It means if you are a trader who wants to trade full-time, your strategy should suit your full-time trading desire. And then if you are a trader who wants to trade part-time, maybe you have a 9-to-5 job and you want to just trade alongside your job, your strategy should make that possible. Okay, so your strategy should basically suit into how you want to go forward as a trader. So now there are steps you must take in creating your trading strategy. Okay, so it's best you create your trading strategy. I'm going to show you my trading strategies. I'm going to show you two strategies which you can follow and start making money immediately. But it's also good to create strategies that suit you personally. So if the ones I share to you will be best for you, fine. But the main goal of this module is to teach you how to create your strategies and how to inculcate them into your trading, right? So the first step would be to define the set of rules for your strategy. So you have to define the set of rules for your strategy. In the next slide, we'll learn about the types of rules and then the examples of things that these rules will contain. And then at the end of the module, we're actually going to look at some of these strategies and look at the rules I've set out for them, right? So that's the first thing you have to do. You have to define the sets of rules. And then the second thing is you have to backtest your strategy with at least 1 to 2 years of data. So you have to backtest it. It means you have to go back to the charts and then go back in history and try to look at where the setups in your strategy were met, where the rules were met, right? So where the rules were met, you have to then try to simulate how the trade will have gone if you had entered the trade based on your rules. Okay, so when you see that, you then record the results and then see how many percentage win rate your strategy has, and then how much you will have made if you actually traded the markets using that strategy at that period of time. So that's how to backtest your strategy. Okay. In MT4, we have the strategy tester, even though this one has to do with testing trading robots, right? Because trading robots are basically strategies that happen on autopilot. So if you go to the strategy tester, you see this. So let's say you were able to get a programmer to create your strategy, or you took my course on strategy automation using FX Dreamer and are able to create a strategy. So you can load the strategy here and basically test it, and you can visually see how it will take trades. Okay, so that's another way of backtesting your strategy. That's using the MT4 and MT5 strategy testers. And another way is using the replay option in your trading view. Okay, this is actually a paid feature, so you have to actually have a subscription to be able to use it. So that's the second way of creating your strategy. You have to backtest your strategy to see if it has a positive expectancy, right? Now the third way is to forward test the strategy on a demo account. So just backtesting it is not enough. It's not enough. You have to forward test it. It means you have to trade it on a demo account, on paper account, right? All of us have access to a demo account. This is an example of a demo account, right? So you can just trade your strategy on a demo account to see how it performs. So the minimum for that is 1 to 6 months. Okay. Now, after you backtest it on the demo account, the final thing is to trade your strategy live. So after trading it on the demo account, you then know that, yeah, my strategy is good and I can actually use it to make money because I've backtested it for at least 1 to 2 years and seen that it's good. I have forward tested it for at least 1 to 6 months on the demo account, and I see that it performs well on live market conditions, right? And the final thing will be to just trade it, to just make money with your strategy. So these are the steps for creating your strategy. Now, the next slide, we are going to look at the category of rules for a good strategy. So if you are to create a good strategy, there are 4 sets of rules which have to be in place, okay, which have to be in your strategy. So we have these rules as number 1, analytical rules, okay, analytical rules, and we're going to look at them just shortly. So we have the analytical rules, we have the entry rules, we have the exit rules, and we have the trade management rules. So these are the 4 most important rules that have to be in place for a good strategy to exist. Now, the analytical rules, what are they? They're basically rules that guide your analysis as a trader. So they are rules that help you identify the trading setup, that make you understand that, yeah, this is a good trading setup, this is a good opportunity for me to trade. Okay, so examples include the time frames where you analyze. So there you have a rule that you analyze only on higher time frames, on 4-hour time frames, on 1 hour, on 30 minutes, depending on what your strategy entails, right? It could also include indicators to use. So it could be a strategy, an indicator-based strategy, whereby probably you're buying here and selling here. That's on the MFI, that's using the MFI indicator, or probably, let me just delete this indicator, or probably you're using the moving average. Okay. the moving average. One of the strategies I'm going to share with you is a moving average strategy. Okay, so this could be, these are part of the analytical rules. And then we have the entry rules which guide your entry into trades. Okay, we have examples include time frames to use for entering trades. We have confirmation like candlestick patterns, retest of support and resistance zones, etc. So these are the rules that guide your entry into any trade. Okay, so all of these rules have to work hand in hand. So you have to first analyze the market using the analytical rules. Then you have to use the entry rules to guide your entry. And then the exit rules guide your exit out of the market. Okay, and examples are stop losses, where to put your stop losses, your take profits, your stop losses based on indicators, based on price levels, okay, based on candlestick patterns, based on whatever, okay, and then your Fibonacci levels and price action, etc. So these rules guide your exit out of the market. And then we have the trade management rules, which guide how you manage running trades. So these rules exist for running trades. Whatever you do not manage well, you lose. That's a very popular saying, which is very true in this case. So I have experienced situations where I was in very good winning trades, but because I didn't manage the trades well, I didn't move my profits to break even, or I didn't trail them, or I didn't close, I basically lost the trade. So trade management is very important. So you have to have trade management rules. Examples are rules which include trailing stops, which include break even, okay, which include taking partial profits, okay, taking partial profits. I don't know if I explained taking partial profits before, but let me just explain it with this running trades. Okay, so if I'm to take partial profits, I'll just have to just come on the trade and right click and come to modify. Okay, so when I modify, I then see the lot size used, right? So just come here, instead of modify order, come to market execution. So when you see this, you can now choose the lot size you would like to close. Okay, as you can see, this lot size is 0.01 and it's the least. So I'm just going to close it and use the other trade. I hope I can identify it. I think this is it. Yeah, so just come here and come to modify. Then come and change this to market execution. And as you can see, 0.04, right? So I'm just going to type 0.01. So I'm going to close 0.01. So this is partial closing of the trade. If I want to close half of my position, I'm not going to use 0.01, but I'm going to use 0.02, because that will be the half of 0.04, right? So whenever I just close it, you see that partially the trade has been closed. 0.01 lot have been closed, and you can see my profits reduced, and the lot size here is now showing 0.03 because 0.01 has been taken out of the initial 0.04. So that's how to take partial profits on MT4. So these are the rules that have to be in place for you to create very good trading strategies. And then final tip on trading strategies. After creating your strategy, you can summarize your entry criteria into a simple checklist, okay? And then every time you analyze the market, you try to score the checklist against what you are observing on the charts, okay? Then you only enter trades with high score marks, say 80 to 100% of your needed criteria. More important criteria should be taken more seriously on the checklist. Okay, so that's basically the final tip. This is basically very self-explanatory. You just make a checklist based on your entry criteria, okay? And then you just observe the market and then check based on what you can see. So if you have up to 80% to 100% on your checklist, it means the setup is very good. It means that's high probability of going in your direction, of meeting the rules for your strategy, right? So that's when you then enter the trade. So that's the final tip. And the next lecture, we're going to learn about other concepts like trading plan. So that will be it for this lecture on trading strategy. Hope you learned a lot. Hope you learned about trading strategy. Hope to see you in the next lecture. Bye.